most of the teams are working remotely at this point in time. Taking advantage of the situation, we also moved into an open, collaborative, and smaller office, and that has worked very well for us. Now, let me provide also an update from the portfolio standpoint. It was indeed a very difficult period, but we took advantage. We doubled down on the effort to scale up our digital trust portfolio, and we have made some significant improvements. Let me take it one by one. On the IoT portfolio, IoT security portfolio, I'm very glad to inform you that we have extended the coverage to operational technology. Now, operational technology security is a growing space, and this is operational technology primarily means the technology that is there in the industrial sector, that is in the manufacturing side, the large infrastructure organizations, public infrastructure companies. Their existing infrastructure is called the operational technologies, and security of that is becoming an important consideration. You would have very well heard some of the high-profile attacks that has happened around the world on pipelines, grids, electricity grids, and things like that. So we have now expanded our capability to cover that side of the security aspect. The next one is partner ecosystem management. Now, we had a very strong offering around the interconnect and routing optimization and settlement area. Now, we have expanded this to provide an end-to-end coverage of the entire partner ecosystem, digital partner ecosystem management. The specific things that we have added are partner onboarding, contract lifecycle management, and blockchain-based settlement. So these are the significant things, and with this, we are in a position to provide an end-to-end management of partners, starting with telcos, and we will slowly start expanding to other areas adjacent to the telcos as well. The other product area was the capacity management, which we talked about in the previous calls. Now, we have again extended the application areas by introducing investment planning as a very important use case. Now, this will become very important as we move towards the 5G-related use cases. With respect to ID Center, the identity analytics, we have strengthened the product offering by including onboarding and next generation eKYC functionalities onto the ID Center platform. The last one is on the Hypersense no-code platform that we have recently launched. I'll take a couple of minutes to explain the whole rationale behind Hypersense. If you look at the enterprises, most of the industries are today suffering from the large monolithic software systems and the processes around them. While it has served its purpose at some point in time, at this point in time, with the digitization and a lot of competition from the digital natives, it is becoming very, very difficult for these enterprises to compete with this very large, clunky, monolithic software. So therefore, the need of the hour is a very lightweight, complete cloud-enabled, loosely coupled platform that is driven by AI and AI, ML, and data. And that is what exactly that we have done with Hypersense. With Hypersense, our enterprise customers will be able to bring products much faster to the market because we have taken care of all the engineering and AI, AML capabilities in the platform, and using a no-code environment, meaning the customer can drag and drop, and the business users without any prerequisite skills on data science, etc., will be able to work with their data, create insights, and improve their customer experience and drive business. So this is going to be a game changer both for Subex and the customers. So Subex is a game changer because this sort of launched our foray into a platform from a software product player. We are becoming a platform player, and also this will help us to transition more and more from a license to a subscription-based or a SaaS-based business offering. Now let me move into the new customer engagements that we had during the course of the year. Let me start with the core. Now we won several large deals, the notable ones being Saudi Telecom, the Telefonica group deal for the South American properties, a very large deal from a tier one in APAC for our business assurance portfolio, and another one in North America from a tier one for the partner ecosystem management portfolio. We have also added 3 new logos, again in the core product area, which means that we are still finding it, our portfolio is becoming interesting to a lot of customers, even in our core areas, and we are grabbing market share from our competition. And also, wherever we have the new very large MVNOs, etc., we are able to tap into this segment. When it comes to IoT, we have taken a completely new approach of approaching the market using channels and distributors. This is showing positive initial signs. We have already onboarded strong partners and distributors in Middle East, North America, and India. Through these partners, we have already secured businesses in the oil and gas sector, the shipping industry, and also the manufacturing side. Now, in the manufacturing side and the petroleum side, these are initial deals that we have signed with large corporations for one plant in one country. But as we start completing the implementation and providing the value, there is an opportunity for us to expand this to other plants in the country and plants in other countries of the same multinational enterprises. I'm very happy to inform you that we have secured the approval from U.S. government on the SAN, which means that we will now be able to provide services to the U.S. government based on the SAN approval. Moving to ID Central, because the extension that we have done, we have started securing customers in all the 3 areas. If you recall, we have discussed that the primary use case is on solving identity-related issues, but we have sort of augmented that with onboarding and next generation eKYC. So we have also started onboarding customers onto this platform to provide some of these services. These are all SaaS-based offerings, so the ramp-up will be slow, but the important thing at this stage is for us to have customers onto the platform so that as the customers start using, we can tweak and we can get the product market fit right before we sort of scale the offerings. We have also expanded the offerings from Indonesia to Nigeria and India in that order. Nigeria is getting launched during the course of this quarter. The local partner has been identified. The first customer is onboarded, and we will be launching formally during the course of this quarter in Nigeria. And the next market that we will be targeting will be India. From a talent front, we have had very nice additions. We have the CTO came on board. We also have expanded the sales capability around the new areas. With respect to security portfolio, we have added sales team members in North America, Middle East, and India. These are the 3 markets that we are currently focusing. We have also added the capability of around the idea for the identity analytics, which is predominantly driving buy and off sales team or offsite sales team in India. The other aspect that we have significantly improved is the delivery capacity. We have started augmenting our delivery capacity in the last quarter, and most of the team members are on board, and those team members are on the training mode at this point in time. And by the end of this month, most of these team members will be the delivery team members would have been trained and ready for deployment. Now looking ahead, we are entering the new year with very good momentum, with enhanced portfolio and a good contracted backlog. In the last couple of years, even though we have significantly improved the effectiveness of our operations and moved the needle in many fronts, the revenue growth had been at the low single digits. While we do not provide specific guidance, this year we expect the growth to be in double digits. Also, starting this year, we expect the new offerings to make a noticeable impact to the overall revenue of the company. With respect to the quarterly trends, historically Q1 revenues are lower than the average quarterly revenue for that year, and then it slowly ramps up, and Q4 is significantly higher. We expect the trend to be the same this year as well, because still the large portion of our revenue will come from our core portfolio. On the portfolio side, we will be migrating all our existing portfolio onto the Hypersense. I also want to update that the Crunch Metrics, which was an new offering, we have decided to roll it into Hypersense. So it will be now available as a functionality on top of the Hypersense portfolio. Once we migrate all our existing products onto Hypersense, we intend to come up with an attractive migration path for our existing customers and transition all our existing customers into the Hypersense SaaS or subscription-based platforms. We also have planned training for our customers, and also we intend to train community developers so that both our customers and community developers can develop applications, models and modules on top of our platforms. The idea is by and by we want to build a marketplace around Hypersense so that there would be a community on one end and consumption for the enterprises to consume these models, applications and modules on Hypersense, which are developed by both our existing customers. We will also develop some of these applications modules, and we will also have a community developing these applications. Now, as we go through this very challenging times, I definitely would like to express my gratitude to all the Subexians who, despite the trying circumstances, are keeping their spirits high and doing a wonderful job. The continued support of our shareholders means a lot to us, and we also thank you for all the confidence that you have reposed on us. I also sincerely hope that we can see the end of this wave soon and will be in a position to physically meet our teams and also be in front of our customers. With that, I would hand over to the operator to take some questions, and I'll come on later to close the session. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Good evening, gentlemen. Vinod, thanks for a nice explanation and appreciate and congratulations on good set of numbers. So my question was regarding Hypersense, which is the most exciting right now. What have you cited? So migration of all our portfolio on this SaaS model platform, what negative impact it could have on us in the initial period, and what future you see an opportunity on that side?
Okay, thank you. I think it's an interesting question, so I will take a bit to explain the whole rationale with respect to our existing telco segment. Now, if you look at our largest customer base is today telcos, and that's what we have been serving for the last 20 years. Now, if you look at the telco as a segment, they created in a way, the digital economy. But unfortunately, if you look at telcos, their overall percentage of the digital commerce has been a fraction. It is under 5% today. And one of the reasons is when we compared with the technology companies, they have been very slow. Anything to launch, it takes 12 months, whereas some of the OTT players or the digital natives launch the product in 3 weeks, 4 weeks. So all the telcos have also been realizing this, and they were looking for a very nimble platform where, if the platform can take care of all the engineering capabilities, then they know the context, they know the market very well. So they can very quickly, within using their domain knowledge, can come up with applications and launch it to the market. Now, we are playing exactly to this need. So what we have done with our platform is that we are providing to our customers, including telco, a no-code environment where using drag and drop, they can create products, they can create services which are IoT ready and 5G ready and launch that to the market. Now, using this platform, for Subex also, it becomes very easy for us to launch new product because the same advantage that our customer has, we also have that. So what we are doing is that now that we have developed the platform, the next step is to migrate all our existing products onto the platform. So we will have fraud management on top of Hypersense, RA on top of Hypersense, and many other products on top of Hypersense. And I'm sure that customers would love it because this is the way they naturally want to move on. Where when we talk about a new feature to be added, we are not talking about months. We are talking about days and a no-code environment to launch that. Now, what would be some of the challenges for us to take them onto the path? One of the important things is the transition from a license kind of model to a subscription kind of model. Now, that is where I think both of us will have to evolve a workable model to how to make the transition. We have enough references. We have seen Adobe moving, Microsoft moving. So there are a lot of companies who have moved from a license to subscription thing. So it is not something which has not happened. So it has happened over a period of time, and we expect that will be the same with us. We do not, at this point in time, to see a particular downside, but only upside now is that for every new customer, if you look at today, if you talk about I'm selling to an ex-telco, there are three large components there: a license or a technology, the implementation, the support, and the infrastructure software and the hardware, right? These are the 5 components. We were contracted for license, implementation in most of the cases, and support. The infrastructure, software, and the hardware was always provided by the customer, and we used to take the help of Oracle, Cloudera, and things like that. Going forward, the infrastructure software will also be provided by Subex. So for every sale going forward, the ticket price will go up because we are going to provide the infrastructure software, and the only thing the customer will have to provide is a hardware or for that even a virtual hardware or AWS or whatever it is. So I think directionally it's a very, very positive move. As we transition our existing customers to the new customers, we have a way forward. We have thought through that. We have already discussing with a few customers. We do not at this point in time see a major kind of negative at this point in time, but it's a new platform. It's a new model. There will be a learning period for both us and customer to migrate into this new model. And during that period, it will be a kind of iterative process. There could be some challenges, but at this point in time, we don't foresee a major challenge with respect to our existing customers. With the new customers, it is a much more easier discussion because it is complete. I mean, we are talking about the latest and in demand architecture of cloud native, AI driven, data driven platforms. So we do not see an issue with the new areas. So that's my view at this point in time based on our current discussions that we are having with customers. Hope that answers, give you some view of the.
Yes, Vinod, it was very nice. But can you elaborate on that? We have now added one more that is providing infrastructure support. So in that, it's again a different business to play into. So what we have done on that side? We have tied up with any subscribers or any hardware guys or anything?
No. On the hardware, we are not providing. Hardware is something which the customer will provide. But there was a software infrastructure required for running our software in the past, like Oracle database was required, things like that. So what we have done with the HyperSense, it's a complete platform which has got the storage requirements. So you don't require any more Oracle or a separate Hadoop or a Cloudera to run our applications. This platform is a complete end-to-end. All what we need is that we need a off-the-shelf or off-the-shelf hardware to be provided, and we will deploy the entire thing on that hardware. So there is no dependency or not need for us to customer to procure any other software to run our products. Now, in the back end, we have a lot of technology relationships that we have in development of this platform. We have leveraged some open sources. We have used those open sources, built the API and the interfaces that are required to bring all the components together. It's a fully componentized, architecture that we have. So we have been at it for the last 1.5 years, and we have made very nice progress. And there's a lot more work to be done. But directionally, I think we have taken a significant step in solving some real relevant and long-standing problem for our customers with respect to providing a platform that is very nimble and on which customers can launch the products much faster than what it is currently.
Thank you. Mr. Shah, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Amish Kanani from JM Financial. Please go ahead.
Yeah, hi, sir. So congrats on a good set of numbers. So one question was, if you remove the volatile part of the forex income, then the YOY, growth looks slightly more muted. So if you can just explain, should we take forex income as part of core operating income, or it's actually fluctuating, and how do we look at that? And what explains the losses versus the gains last year? And the second question is, sir, if you can give us the sense on the partnership. The Snowflake's partnership, I think, was one of the key event for us on the HyperSense side. So if you can explain what roles will the partner play, and what is the opportunity there for us, and updating the other various partnerships that we had during the year, which was Tech Mahindra, Skylab, and Oran Alliance. If you can give us some sense how they're progressing. Thanks.
Yeah. Venki, you want to take that forex one, Venki? I'll come back on.
This is the operator. Sir, we are not able to hear you clearly. The audio is breaking from your line.
Okay. Is it better now?
Yes, sir. Thank you.
Okay. Yeah, so last year we had a forex gain, as you rightly mentioned, and this year it has been a loss. And forex gains and losses, as you know, is a function of how the market moves. And so while we do hedge and a portion of hedge our exposure, and that happens, but I think to an extent of the way the market moves, it does have an impact on our numbers. But I think if you exclude that, our operations have been fairly stable, and we have had good improvement in our profitability numbers. But so I think we have to. It's part of the process. We are still trying to see what else we can do to reduce the volatility. But that's something we will see to an extent, given the nature of the business.
Okay. Now coming on to the partnership side, as you can appreciate with the platform approach and some of the areas that we are playing, which is we are catering to a wide segment. It is important for us to have the right go-to-market partners. Now, so we have partners for all the new areas. We have struck a lot of strategic alliances and strategic partnerships. I'll start with IoT side to start with. IoT, we have key partnerships with Skylabs, which is a provider of the MEC or the mobile edge computing, and we have already we have a go-to-market, and we have already cracked into the 5G security market with them. We have looked at in the shipping side with them. We are also looking at other deployments of smart cities, theme parks, and many other areas wherever there is a mobile edge computing requirement. We are embedded into the mobile edge computing application of Skylab. So that's been a very important thing. The other thing that we have had a partnership is with a battery manufacturer, which is primarily making fuel cells for the autonomous the electric cars. Now, this is again an integrated aspect that that fuel cell is probably the most important part of the electric car. So every car in which that battery operator is providing to support, our security will be an embedded part of that. We also have Telefonica, which is again as a key go-to-market partner. So wherever Telefonica takes their security offerings, we will be a part of the part of that partnership. So these are some of the things that we have done with respect to the partnerships on the IoT side. We have many other large distributors which we have signed up, but that is more kind of a channel distributor, very, very important strategic mainstream distributors. But we will be announcing some of them, a major one that we have signed in Middle East during the course of this quarter. But we have already started deploying some of these things, some of the deployments through them. That is with respect to IoT. When it comes to the identity analytics, we have again key partnerships which we have signed up with the telcos, because arrangement is that we will take the consent from the consumer, look at the telco data and provide a lot of insight. So we have arrangement with our telco partners, which is helping us to solve identity related issues. Now coming to HyperSense. Now HyperSense is when we launched the platform, one of the key aspects that we are focusing is on the AI ML studio. So we have an AI studio, which means that if any of the business users wants to use artificial intelligence, we have provided a no-code environment. Now, Snowflake is also a free provider of the platform in many markets. And they found that our AI studio is a very interesting concept. And in their evaluation, they felt that it is important for us to have the pilot. We wanted Snowflake because it gives us a platform to reach the entire Snowflake customers with our AI studio, and Snowflake found it as a nice way to sort of fill a portfolio gap they have, so that when they go to the customer, along with some of the other aspects of platform, they can also provide a AI studio as a part of it. So our AI studio is what evoked a lot of interest with Snowflake. With respect to Tech Mahindra, it was again a partnership around the blockchain. That is around the partner ecosystem management, and that is we have started evolving it, and it will take a while for us. We are discussing with several customers at this point in time. We have one implementation which is not on blockchain, but which we are directly doing with customers, with a customer, tier one customer in North America. But we have started discussing with group operators on how we can provide a blockchain-based settlement among the operators among the group. So these are interesting discussions, because the blockchain is still we are looking at what is the best way to take blockchain to the telco segments. But the partner ecosystem management is it's probably one of the first use cases that will be tried in telcos. So we are quite excited with that. So partnerships are very important, and for all our new areas, that will be a part of our GTM go-to-market strategy.
So thanks a lot for an elaborate answer, and all the best.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Thanks. Hi, Vinod. Hope you are well. And my first question is regarding HyperSense. Two questions actually. One is that are we using it beyond telco vertical or with the partnership with Snowflake and things like that, or this is primarily we're starting with the telco? And second question, relatedly, we do have a lot of managed services contracts. So, what is your thinking on transitioning them to the SaaS model?
Okay. So first on the Hypersense, Rajesh, our initial focus is going to be telcos because that is where we have the reach. But having said that, we have already had some inbound reaches coming from other segments like insurances, fintechs, etc. And we are engaging, and that is where some of these partners are becoming very clear. And that is again, you mentioned partnership. I mean, we were talking about Snowflake. So, for example, Snowflake does not have a big coverage on the telco segment, and we have a good coverage on the telco segment. So it works for both sides. Right? We are able to bring them into our customer base, and they are able to bring us into their customer base. So our current focus, Rajesh, is on the telco segment. But having said that, to our partners and with some inbound, we have started looking at the other segments because if we can find an integration, somebody who can develop the use cases, or if the customer themselves have a team which can develop the use case, then this is a platform that can serve just about every segment, Rajesh. So that's on the first part of it. Rajesh, what was the second question? I'm sorry, I missed that second question part.
Yeah, no. Yeah. A lot of managed services contracts with these telcos.
Okay.
So how do you transition them to the SaaS model? Yeah.
Look, Rajesh, managed services is in any case a services model. It's a monthly services model. I wouldn't call it completely as a subscription type of it. So I think the subscription is more on the technology side, Rajesh. So this Hypersense is where the license is what is getting transitioned into a subscription model. But the operations part of it is even today operations is on a monthly service charge basis. I do not see that there will be any impact on that. If the customer wants us to do the business operations and that will be something outside, independent of the platform or subscription that we are talking about, Rajesh.
Okay, so just not to belabor the point, the way I was thinking about it, that earlier we were using technology which was, let's say, old gen, and we were charging X% to the client for the services on a monthly basis. Now with Hypersense coming in, because it's a new technology, you can argue that your operations will become more efficient, and therefore you will have higher savings, so to speak, meaning your profitability per contract will go up. And from the client perspective, they can argue that because you have this new technology, well, why don't you pass some of the savings to us also? So that's where I was coming from, if you can just comment on that.
All right, okay. So I think you have a point in the sense that the new technology is much more nimble and easy to use. But having said that, the operational requirement does not come down. So let me give you an example. We provide a fraud management system, and we provide the best fraud management system that will point to fraud much more smarter than what it was doing in the past. But still, there is a need for somebody to evaluate that and take an action, right? Now, that is the operation part that we are talking about. So we are talking, so the requirement of managing, maintaining the system will come down, but the business operations is a separate thing altogether. So the customer would need support. I mean, in many cases, the customer have their own team to support, but it's based on the customer view. I mean, we are seeing that an onshore, offshore kind of model, and wherever there's a possibility for customer to offshore, they will look at offshoring the business operations so that they get the advantage of that. So we don't see a drastic change happening on the business operation side of it, but on the IT operation side, yes, there will be a much reduced need for IT operations. And to that extent, the operations need of both the customers, and if we are supporting the customers, that might come down. But that is not our focus area when we talk about the managed services. When we talk about managed services, we are talking about the high-value services. That is, we are talking about the consulting on an ongoing basis or the business operations on an ongoing basis. And that does not drastically change with the platform change, Rajesh.
Okay, that's very helpful. And then this new slide that you have added on the deck regarding the analytics of 500 billion market opportunity. So what product are we mapping this to? Is it the Crunch Metrics or is it the ID Central? And, what realistically is the market we are going after in the near term? Because I'm sure this is like more 5 years kind of, market opportunity. But if you can comment on that.
So Rajesh, that is the opportunity of just the platform, not the applications on top of the platform. If you look at today, what we are expecting that starting with telcos, just about every segment, every enterprise will go through a cycle where they change their existing technology and invest in a technology of platforms where they can start doing things digitally much more faster. So the mapping of what we are talking about. So if you look at telcos, we are talking about that being about $10 billion. Now telecoms, now that $10 billion we are talking about just the platform which will the platform market, not the application that will sit on top of it. Now, of the 10 billion, there are a lot of players that will play in that space as well. There will be players as big as, like for example, Snowflake plays in that market. Cloudera will play in that market. So there are a lot of players who will play in that market. Now, our thing is that we are leading with AI. While some of Snowflakes and Cloudera, etc., they have been looking at the normal plumbing elements like data management, data visualization. We are taking a pole position with respect to AI ML Studio and how we can sort of democratize AI and ML. And that is where I think our story is ticking, because we are going and telling the enterprise CXO saying that with all the investments that you have done in data analyzing, business intelligence, etc., your businesses still are waiting on your IT team to deliver insights. This is an opportunity for you to change that paradigm. Can we go and say that with a small subscription, offer this to your business users, and the business users, without any knowledge of data sciences, can use drag and drop? Of course, we are creating some libraries for each of those areas. So, for example, if they want to look at customer churn, we will have a library of AI models that is adaptable to solve the churn issues. So the customer can apply this model using drag and drop, get the data, use the drag and drop, see the results, and see whether can act on it and see whether it is working. Now, this is how we think that the democratization of AI will happen, where business users without any training will start using analytics, and that will be probably a very enabling thing for the businesses as well. So that's what we are leading with Rajesh. So each of these areas have been mapped out, and currently our focus, we are going after the telecom segment specifically, but with our partners, etc., we will slowly start expanding it, Rajesh.
Thank you. Mr. Rajesh, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Chetan Ladda, individual investor. Please go ahead.
Hello, Vinod and team. Congratulations for the good performance last quarter and also for the double-digit revenue growth guidance that you just provided. My question is more towards the disclosure that you made regarding the dividend distribution policy. So if you can give some details around that as to like what percentage of profits are we speaking about, or any more details that you would like to provide as of now.
Okay. I just want to quickly confirm, GVK, is that something which we can discuss, right? I just want a confirmation with GVK. Can we share that information in the call now?
It's that we have not made it public, so it has to be first disclosed to exchanges, and we can do it.
Okay. So we will park that question, because we will make that public first and then we will address that, if you don't mind.
I think that's fine. We will wait for it. Yeah. That's it from my side. Thanks, Mr. Vinod.
Thank you.
Thank you. The next question is from the line of Supratim Basu from Americorp Capital. Please go ahead.
Thank you. I last looked at Subex back in I think 2003 or something. So congratulations to you, Vinod, and your team for setting the foundation for a new interesting company. I have two sets of questions. The first is actually really a suggestion for creating a data sheet which will help us understand the company better as an analyst or investor. So if you could provide the revenue breakup in terms of license fees, management services, other revenues, and then the revenues geographically, and then the revenues sector-wise for the last 4 quarters, as an example. And then if you could also provide the number of active customers per quarter, and also the metric for what is your net revenue retention rate or net expansion rate on a quarterly run rate basis. I think these would be really helpful for us to understand the company better, and it also would help us map the progress of the company better. So that's just a suggestion from my side. Happy to send this list, this laundry list to Diwakar, and then he can probably coordinate with you guys.
Sure. So first of all, thank you for that suggestion. So if you look at, we have providing the breakup of managed services, support, and implementation, customization, and license as a 3 components, and that's how we are tracking. And the only
I can see that on the deck though.
Slide 18. It is there in slide 18. Of our deck, which gives that.
Okay. Okay. I saw. No, so point is that this basically says, if you could strip out license from implementation and customization, that would actually be helpful. And if you could provide this metric in the form of actual numbers rather than these percentages.
Okay. All right. Okay. We will look at that.
You get where I'm going to. You get what I am driving at, right? Because it would help us understand to what extent this can be a non-linear company versus a linear people-based model that you have on the managed services side.
Yeah. So that is where I think, because the product side of the things, I presume that you understand the product side of things. Now, in our case, the license implementation and customization, that is all driven by new product implementation, right? So it is becoming more and more as one thing together, and we also want to package it that way by the customer because of some of the account based or the customer dimensions kind of thing.
Here is a suggestion. As a previous commentator also mentioned, you would actually want you instead of selling an enterprise license which is valid until the next release comes out, you would actually want to look at moving to a per seat basis licensing. So whether it is an existing product or whether it's a new product. I'm sure you'll get pushback from your customers, but essentially you'll have to put bells and whistles on existing product and say that, oh, this is a new product and therefore you got to pay me in this new model for me. But the managed service is big, right? Especially given that telcos are 80-90% of your revenue. That business will grow very slowly. The key growth that you're going to get is, and even for whatever you want to do with Hypercent, you really want to have a per seat model. You don't want to go with an enterprise license model.
Yeah. So it is going to be a subscription model. It is not going to be on a per seat, but it is going to be the per compute, because that is what is relevant for us. Similar to the cloud data, things like that. So all the new areas we have already transitioned to a subscription-based thing. So for example, IoT security or identity analytics, Hypersense, everything new is based on subscription. And as I told you, as we migrate all our existing products onto Hypersense, that will also be taken to the market on a subscription base. Now, at this point of time, that revenue is very small, but as we go through this year, I definitely think that the subscription thing will become a larger portion of the overall, or rather an impactful portion of the overall revenue, and we will start bringing that color when we provide the details there. It was very insignificant at this point in time, the subscription part to provide that. But we take your point and we will bring that as we make progress in that area. We will start providing more metrics around that subscription part.
Thank you. Mr. Basu, may we request that you return to the question queue for follow-up questions? Thank you. The next question is from the line of Anuj Daftari from Daftari and Associates. Please go ahead.
Good evening. Congratulations on a good set of numbers. I just wanted to understand whether the Hypersense platform has already been monetized or is the monetization going to start shortly? And secondly, in the same context, what is the charging structure going to look like in terms of per enterprise or per user, or how does that work?
So on the first part, we just launched it last month. So we are just in the phase of discussing with customers, and hopefully we will have something to. I mean, as a part of the next quarterly update, we should have some updates around how we are progressing there. With respect to the charging, we now have 6 modules, specific modules on Hypersense. So each of the modules are going to be separately charged, and each is a componentized thing, right? Every component is a module by itself, and each component has got a monthly subscription charge based on 3 modules are based on compute, and 2 modules are based on number of seats. So AI module and business intelligence module are based on seats, and the rest of the modules are based on compute. We also have a storage module, which is based again on the compute. So this is the model that we have. It is consistent with the other products and the other platforms that is available in the market.
So just one small follow-up question in relation to this. So when you talk about charging per compute module, so you mentioned 3 modules are compute module and 3 are in terms of the number of business seats. So what is the charging structure for each of these business seats and each of these compute modules? Is there some fixed structure there, or is it subjective?
No. We are working with a list price, and we have a specified price per compute, and a specified price per seat. So I mean, I didn't fully understand what the question. So we have a list price based on per compute what will be this thing. So the idea here is that the customer can start small, and as they add more and more use cases on top of our products, the subscription, the compute will increase, and therefore they will have to pay us more subscription fee. So that's how we have done. So we have a price list which we are working with, and that's how we are engaging with our customers at this point in time.
Thank you, Mr. Daftari. May we request that you return to the question queue for follow-up questions. Reminder to all the participants to please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Jay Datani from BJD Securities. Please go ahead.
Yes, thank you. Yes, hi, Mr. Vinod. I just wanted to know what kind of revenue growth or additional revenue are we expecting with all the new developments like the Hypersense, the new partnerships like the Tech Mahindra, the Skylab, the ORAM alliance. So what is the kind of revenue addition that we are expecting in the current year and also in the long term, let's say 5 years down the line?
Okay, so we have been consistently providing our expectation that we are looking at the new areas to contribute about $15 to $20 million ARR in the next 2 to 3 years. So we stick with that guidance. That's what we are working towards. With respect to the specific guidance for this year or this quarter, etc., that is not something which we are providing. But overall, this is what we're providing. But as in when, I mean, at least by quarter 2, quarter 3, at least we feel that we should be able to provide you some more color on how we are doing with respect to how the MRR or the ARR is growing for these new areas. Because at this point in time, it's a very early contract, so it does not make from an overall standpoint. If you look at our overall new product revenue is about $2 million at this point in time. So if you cut that into MRR and ARR, it's a very small number of an overall thing. But as it starts growing, we'll start providing how is the growth happening in the MRR, ARR, and things like that.
All right. Thank you. Thank you very much.
Thank you. The next question is from the line of Ratan Juneja from CoValue. Please go ahead.
Yeah, hi, Vinod. Congratulations. My question is on the interesting market size of analytics that you presented in the investor presentation. What's the addressable market that we are going after out of this 500 billion? The 500 billion seems to be a very large number. And it excites everybody. So what is the exact addressable market over a period of, say, 5 years that we would like to address? My second question is that how do we compare ourselves to a company like DataRobot, which is tied up also with Snowflake and also provides artificial intelligence ML learning? That's about it.
Yeah. So I think the first question, the segment that we are initially focusing on is on the telecom segment. And if you look at the size that is estimated is about $10 billion, is a size that is estimated today of the platforms in the telecom segment. And as I told, there are a lot of players playing in that space. But we have a sweet spot when it comes to, we have about 200 customers at this point in time, and we have a possibility for us to convert all these customers eventually into high-percent customers, starting with our products and then encouraging them to use the platform to solve other use cases which they might have. So that's in the current approach of targeting on the telecom segment. With respect to DataRobot, so it is a product which is in the AI space. But I think if you look at the components that we have as a part of our offering, it's an end-to-end. It is not just doing one part of analytics around. While we are leading with AI and ML capability, we do have the capability to provide an end-to-end platform taking right from the data management, data visualization, AI ML, and the operations and the workflow management. So it is an end-to-end platform that we are providing. So at least for our core segment, to start with telecom, this is quite an interesting proposition where they do have data lakes, so we don't have to replace them. We can coexist with them. But what they want to do is a platform that can leverage their existing kind of investments that they have done in the storage, etc., and thereby leveraging the existing infrastructure rather than ripping them all together. And that's what we are playing with to start with. And the advantage that we have is the existing customers and our ability to migrate them over a period of time to this new platform.
Thank you, Mr. Juneja. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Amit Bachawat from Optimum Financial Solutions. Please go ahead.
Hello. Yeah, hi. Good evening, Vinod. My question is, what is the revenue sharing with Snowflake? Like in terms of any business you get from them, what will be the revenue sharing? That is first question. Second, what has been the capex on Hypersense product which you have built? And ongoing basis, what kind of expenses you would do on the platform?
Okay. On the first part, I don't think that we are in a position to, share the details of the commercial arrangement that we have with them. At this point in time, what we are focused on is creating a joint value proposition that we are going to take it to the market. So we are in the space of developing and training and creating the content for a joint value proposition to the market. And as we get into the market, we will provide, as and when we are in a position to provide more details, we can provide that. That's where we are with respect to Snowflake. With the question of what is the investment at this point in time, we are about 100 odd engineers, developers who are working on this platform, and the other. So with respect to the marketing and marketing, go-to-market, our existing team, all the enablements, we have been working on this for the last 2 to 3 months. Most of the customer reach out being the initial customer reach out is planned on telco side. So our existing field teams will take this to the market. Obviously, there will be some partners for us to sort of move it to the other segments. But for most of the initial go-to-market is planned with our existing team, and we have an existing team and a marketing setup that is already in place to take this to the market. The number of the engineers who are working as the developers and architects, etc., who is working is around 100 at this point.
Thank you, Mr. Bachawat. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Subrata Sarkar from Mount Intra Finance. Please go ahead.
Yeah. So first a suggestion, sir. Like since we have launched a new product, like it would be great, like if you do a analyst call or analyst day, like something on all your new existing initiatives and products, and you can give some demo on that also. This is the first point from my side. Now, related to question first, a few data points I want to know. Like first is what is our total employees in the organization right now, and out of which you have shared like 100 odd developers are working on this hyperscaler, but all including all new products and initiatives, like how much is total manpower who are involved into this area? This is the second question. And third, sir, if you can share, I understand it's a very new, like we have recently launched this product, but if you can share one or two case or experience of or initial reaction from the customers regarding this product, hyperscaler.
Okay. First, on the total number of Subexians, we have at this point in time about 1,200 Subexians. Out of that, if I count the total team members who are on the creation side, I would say it will be closer to about 300 to 325 will be on the creation side of things. Creation side with all new products, engineering, everything together. Our AI labs all put together will be about 300 to 325 people. That would be what I would say on the creation side of things. Then the question on the interaction, we are having. We launched it on 22nd of April, and post that we have had on an ongoing basis, we are engaging with our customers, and the overall response is quite positive. We are moving into the phase of demos and things like that. What is most exciting for the business users and the CXOs is the AI studio. It's what we call as a data science studio, which is where I think the business can apply some of the AI models. Because even if you look at our existing customer base, they've been quite challenged with retaining. I mean, first of all, acquiring the talent with respect to data scientists and retaining them, I think quite a bit. And therefore, if you look at many of the telcos, there's a long list of requests to the IT teams to provide insights, and the business is never happy with the pace at which things are happening. So this is a welcome change to the approach that they can empower themselves to do this. So I think the initial response is quite positive. We are getting into the phase of demos and things like that. So that's where I would say. We have also got some quite endorsements from the analyst community, and that we'll share as we go along there. Very positive endorsements from the analyst community on what we are trying to do here.
Thank you. Mr. Sarkar, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Amit Mishra from BWS. Please go ahead. Mr.
Hello.
Mishra, your line is in talk mode. Yes.
Yeah. Hi. And the team, congratulations a lot on very good numbers, very good financial year. I have a couple of questions to ask. Some of the questions are already answered. So I was just thinking that this cloud native platform that is Hypersense, and you said that you will be moving all the platforms products you have on this cloud native platform. So I guess there is some I think there is some policy from the government in accounting where you have to show depreciation or accelerated depreciation when you put products into cloud from old technology to the new technology. So is there going to be a D&A for FY22 because of this transformation? This is my first question.
Venki, do you have any on this, Venki?
Yeah, I mean, I'm not sure what regulation you're referring to. See, typically what happens is wherever there is goodwill or...
There is a regulation, Venki, there is a regulation in the telecom tried in India, but I don't know if it's worldwide just like that. When you move, because there are few companies which had to go through the accelerated depreciation by moving when they move the technology to the cloud. So just wanted to know.
First things first. I think first things first. In our case, we don't capitalize our product development costs. Okay. So all our products which we have developed over the years, we don't capitalize it, and it is charged to P&L whatever development cost which we incur. So to that extent, we don't have any of those accelerated depreciation requirements. The only other, if at all, from an accounting perspective, if you look at it, and it's not that we are regulated by TRAI. We are providing services to telecom operators. So our services doesn't come under the purview of TRAI in any form or manner. And the last point, from an accounting perspective, if you want to clarify, there are goodwill and investment-related impairments which we need to make on an annual basis, which we will continue to do, and I don't see any risk of any impairments given that we took a large impairment last year.
So that's the 340 crores still remaining, right?
Yes. So I don't see a problem with that, and I think whatever projections of the business which we have right now, and we have closed our financials for last year as well, and the auditors have also looked at it. So we don't see any potential or a need for any further impairment on that remaining goodwill which is there on our books.
Okay. Second question for me is just our focus on bringing institutional investors, like we talked in various con calls previously. There is thing called ESG, the environmental, social, and governance model, where you have a lot of funds which are dedicated for companies following this policy within the company. So I'm not sure if Subex is considering something like, incorporating this new thing or new trend in investing community. Your thoughts, Vinod and Vitti?
Yeah, so I think so I think we definitely are. I think in the last couple of years we've been actively reaching out to the investor community, and we have stepped up the activities on that front, and that's why we have Diwakar and team helping us as well. In terms of taking on additional disclosures like ESG and all, those are things which will evolve. And I think we want to step up our investment activities and get some institutional investors on board, and then we'll continue to look to evolve how do we do that. There are no immediate plans to do that, but I hear you, and that's something we will consider as we go along.
Thank you, Mr. Mishra. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Ravi Kumar from Hyderabad Tech. Please go ahead.
Hi, firstly, thank you for the performance. I just want to know what is the stable, how stable we are financially. What is the correct debt on the books and cash position, if at all any?
We are completely debt free. We don't have any debt on our books. There is a small borrowing which is there in the financials. If you see, I think that's a PPP loan which we have got, the Paycheck Protection Plan loan which we have got in the US. Such a small number. Apart from that, there is no debt on the balance sheet, so we are comfortable from a financial position. I think their cash on the balance sheet is also extremely good. They are almost like 142 crores of cash on the balance sheet. So financially, we are fairly strong, and we don't see any challenges to whatever growth plans we have or funding requirements we may have for our growth plans in the immediate future.
Okay, thank you.
Thank you. The next question is from the line of Deepak Chukani, individual investor. Please go ahead.
Hi, Vinod. Just wanted to know, would EBITDA margins also start going up given new product mix and better product offerings in future?
Thank you. Yeah, so I think it's still early days. I think if you really look at Hypersense, I think there will be a transition process which will happen as we move from our existing products getting onto the platform and then customers adopting it and us transitioning them into the newer model. So as we get to scale, we should start seeing benefits. I think more than the Hypersense, I would say if our newer areas like IoT security, ID Central start scaling up, that's when we will see a significant uptick on the margins, because those products are all purely subscription based, and as they start scaling up, the margin profile of the company should improve. But I think we will need to give it a little more time before we can start profiling that or giving you forecasts around it.
Okay, correct. Thank you. The next question is from the line of Bharat from Manthan Research and Advisory. Please go ahead.
Thank you for the opportunity, and congratulations to the team on the performance. I have two sets. One basically on the P&L side, fairly basic question. The performance for the last quarter was muted. So just wanted to understand, is it because of the transition to the new model, or we had a loss of legacy business or something like that?
No, so look, I think we are qualified in the sense that in the previous quarter, if you compare that with the FY20 last quarter, we had a special revenue of we had a hardware supplier revenue of almost close to 10 crores. So that was a one-off thing that was an event which happened on FY20 and FY20 Q4. So that's something which we have to consider because it is a one-off kind of thing. So to that extent, it is not a unusual, let's say, kind of a lack of growth. But having said that, we did have some challenges on the delivery front due to the challenges of delivering on new projects. We secured some very large new projects, and we had found it was difficult for us to progress it at the pace that we wanted because of the remote working mode, both from our end and the customer end. So as a part of that, we have added the capacity as we intimated in the last quarter, that we added significant capacity so that we can factor some of these additional requirements of working remotely. I would still don't really think that we have fully solved that thing because, it's not so much from our end. It's both ends have not been suited for running brand new projects in a complete remote mode. So we are learning some of those things, and hopefully by next quarter, we are at least in Africa and all our teams have started traveling. So some of these things will move on. So 2 points there. One is that we had a one-off revenue of 10 crores in the last quarter of FY20, so that should be something which you consider when you compare. The second aspect is that we did have some challenge with respect to the deliveries of new projects on account of both remote and distance. So that will get ironed out as we are increase the capacity, and that should get ironed out as we go through the season.
Thank you. The next question is from the line of Aditya Sharma from ICICI Prudential. Please go ahead.
Hi, Vinod. Just a quick question. I just wanted to ask that our cash position has actually moved up since last year, and I was just looking at the P&L. Our other income has actually gone down. So, now that we have a fairly substantial number in terms of the key cash that we are holding in our balance sheet, is there a thought behind using it much more wisely, or because almost 150 odd crore, earning us 4 crores annually, are we putting some mind behind it?
Thank you.
Yeah. So I think the other income going down is it's not necessarily because of the cash position. I think it is more around the fact that we had some one-off receipts for some insurance-related claims which came through last year, which is not there this year. Otherwise, the other income from deployment of surplus cash has only gone up compared to the previous year. On the larger question on cash itself, I think we continue to look at how best we can deploy this cash, and this is why I think the board has also been looking to return some of this money to the shareholders by a way of dividends, and that's how you would have seen the interim dividend which was declared of 10% and then another 5% now for this quarter, which the board has recommended for the shareholders' approval. And apart from that, we continue to look at opportunities for how to deploy this in terms of and as you would have heard, I think we also have a lot of plans for our new businesses, and that also need investments. So some of this cash will go into those investments. If you look at it from our own internal plans, we are looking to spend at least anywhere in the range of $4 to $6 million in the newer areas. So there will be need for some of this cash to be deployed on those newer areas. Apart from that, if there are any other better ways to deploy this cash, then we continue to evaluate that, and we will continue to keep you updated on the progress we make.
Thanks, Venky. But just one thing. So what you're trying to tell me is this account, this 140 odd crores is sitting in our current account earning us nothing, or probably just in an FD or something of that sort, if I'm not mistaken then.
Yeah, obviously, I think to the extent whatever this cash is not required immediately, we do get pocket in FDs. But I think there is also a need for that money to be deployed in your areas, and that doesn't necessarily happen in one go, right? I think it happens over a period of time. So therefore, there is a little bit of a timing to that extent. But we continue to evaluate other options as well in terms of how do we look to deploy this cash.
Thank you, Mr. Sharma. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Alkesh Jain, individual investor. Please go ahead.
Hi, Vinod. Congratulations on the steady set of numbers. Vinod, I would like to ask you that with the launch of so many products we are doing regarding IoT, ID Central, HyperSense, what kind of orders we are expecting from such kinds of products? What can be the size of the orders we are expecting?
So as I clarified to an earlier question, our expectation is that in the next 2 to 3 years, we should be able to get an ARR of about $15 to $20 million, annual run rate revenue of $15 to $20 million from these new areas. This is a subscription business, and that's where I'm saying that the ARR becomes more relevant. So that is what we are expecting. And as a technology company, and we are not a services company, so as a technology company, there are 2 things that we are doing. One is we are logging into areas that have got a lot of runway for growth. So therefore, we will find Subex competing in much larger segments than we have done in the past, and we are gearing up for that fight in that larger segments. That's point number 1. And as we go to these larger segments, we will have an adjacent products that we can take into the same segment. So if you look at our entire set of products are coming into a bucket of digital trust. So our vision is to be the largest player when it comes to enabling digital trust for customers, and that is where we are working. And there's a lot of things around digital trust that still as a portfolio growth that we could have. So we are very clear that we are playing in the area of digital trust, and the expectation, as I said, in the near term 2 to 3 years is to get to an ARR of about $15 to $20 million.
Thank you so much. Thank you so much.
Thank you. The next question is from the line of Avinash Malpani, individual investor. Please go ahead.
Yeah, I'm sorry. Congratulations to good numbers. So my question was around institutional buying, which is already been answered. So you can maybe pick another person there.
Thank you. The next question is from the line of Amit, individual investor. Please go ahead.
Congratulations, sir. My question is, this must-talk HyperSense product, is this product can be used in governments also worldwide? Because you have AI, ML, and big data science. And this product can be also effectively used in like Amazon or Flipkart, like companies, e-commerce companies. Is there any plan you have to go there?
Okay. So first the question, can it be used in any environment? Yes, it can be. But are we talking about taking it to the Amazon may not be, but I think at some point in time we would, based on the use cases, there might be something that probably we might engage with the large e-commerce players. So as I told you, our current focus is on telcos because that is where we see a natural traction for us, and we have a path to migrate all of our existing products, existing customers to the platform. But every new product that we come out with leverage this platform. So if you're talking about tomorrow, ID Central, security, everything will start leveraging this platform. So today we have customers with security in oil and gas, smart cities, manufacturing, shipping, by everything will go as a part of the platform. That's a part of the plan.
And then my next question is that what we after 1 year, where we can see the hiring program in Subex. Right now we have 1,200 Subexian. What do you see at the end of the year?
Look, I don't think that we will add significantly on top of this from a numbers standpoint. There could be an addition of maybe 5% or something of that nature. But from a people perspective, we will not have, because we will. The idea is to leverage a lot more partners to reach to the market. So I don't expect in the 12 months period for our workforce to increase more than 5%, if at all. I think we have currently we have sized the capacity. I mean, we have built the capacity for our current needs, for this year needs. But in any case, I don't see it as going above 5%, if at all.
Thank you, Mr. Amit. May we request that you return to the question queue for follow-up questions. The next question is from the line of Ashit Koti, individual investor. Please go ahead.
Good evening, sir. I had two questions. One was why you have given in your presentation that like analytics, different market, different segments, like healthcare, bank, BFSI, and things like that. What is the overall international market size would be of in that particular product analytics? Now, in that, would you be able to provide information as to who, in each segment, who are the top 3 or 5 competitors we would be competing with?
Okay, all right. That's something which we can look at. That at this point in time, we are looking at only telecom as a market, and but in any case, we will start developing that, providing more color on some of the competition in the target segment that we are providing. We'll provide that as we go along. Yeah. Because
as you've given over there, multiple segments you have mentioned, healthcare, BFSI, and telecom. And rather, in telecom, I had seen as to the growth prospect was the lowest among all the sectors, which was you had shown as 13% CAGR.
Correct.
Compared to others.
Correct. Yeah.
So, in a way, telecom possibly with a lot of consolidation happening worldwide, apart from India. The market is shrinking or no?
Oh no! So look, I think telcos will always, I mean, with 5G and around the corner. I do not think that the telcos will.
The market will be expanding.
Yeah.
Sorry to interrupt. Market may be expanding. The user base might be expanding, but the players might be concerned.
Players might be. Yeah, players. There is. I think we have seen the. I mean, last couple of years we have seen a lot of consolidation happening. Will there be more? Maybe. But on the one side also you should understand that with 5G coming in, there is a set of alternate service providers already coming in. So the market expectation is that when it comes to 5G for the enterprise segment, about 40% of the enterprise segment will be catered by an alternate segment, which means that they have nothing to do with the current telecom operators. There will be other operators, let's say operator X, who will start providing 5G services to all the enterprises. So while on one side we are seeing consolidation, on the other side we are having MNOs, MVNOs, and alternate service providers coming. So there is going to be a spend in this market. But for the existing telcos, yes, I would say that we should, at least for the next 12 months, it is quite possible that we could see some more consolidation happening particularly in the emerging markets.
So with 5G, lot many new operators would come in, specifically with 5G. That's what you mean to say. In that scenario, what would be the overall business size you are expecting? Overall business. And of that, how much Subex would be gaining for?
Okay. So look, we have an existing set of portfolio that we take to telcos. So all of them will have to be migrated or let's say upgraded to support the 5G environment. So we already have the 5G use cases and we are working with the customers. So that's a revenue possibility on our existing code to support the upgrade to the 5G. So that's one part. Second, we are looking at 2-3 areas as a new product offering for telcos, specifically around 5G. That is on security side, on partner ecosystem management side, and the capacity management side. One of the earlier gentlemen asked about the O-RAN partnership and all those things. The O-RAN partnership and all are very relevant as we talk about capacity management into the 5G side. So we have a new set of products that we are catering to. And then, of course, the Hypersense is a completely new platform which we have never played in that space so far, and this is a new area that will space. So by and large, I think that we have in the last two years what we have been focused on in creating the right side of IP. We have never had so much of IP created in a period of time within our company, and now that is what we have created. And the next step is for us to execute on the GTM in an appropriate way so that we can start seeing the benefits of some of these IPs that we have created. Now, how do we size that at this point in time? This year, as I said, we will get into a double-digit growth. That's what we are looking at this year. And overall, I think in the new portfolio, as I also mentioned, we are looking at an AR of 15 to $20 million. So we want to stick with this for the time being as our interim target, and we'll see how that. And as we go along, we will provide more clear projections as and when things start emerging.
Thank you. Mr. Koti, may we request that you return to the question queue for follow-up questions. Ladies and gentlemen, we will take the last question from the line of Ashish Dash from Sharekhan. Please go ahead.
Hi, sir. Good evening, and thanks for the opportunity. Just wanted to understand, when you say double-digit growth, so my understanding is your horizontal one business contributes maximum revenue, that is 90-95% of your total revenue, and that would grow at suppose mid-single digit or high single digit rate. So what would be the driver? Which area, like horizontal 2 or horizontal 3, would drive your growth in FY22? And relating to that, when you say new portfolio will become 15 to 20 million USD in next 2 to 3 years, what is the annual run rate currently? So could you please answer this?
Yeah. So on the first time, I think first thing, yes, you're right that we should have growth both from core and the new areas for us to get to that number. Please also bear in mind that some of these new revenue, no business model is on a subscription mode. So therefore, some of the subscription mode things, it will take time for us to ramp up the revenue. But I think we are more focused on getting those strategic wins at this point in time so that it will start providing revenue as we ramp up. So to answer your question, we should have growth both in the new areas and on the core area, because then only we can get to overall double-digit growth this year. So that's what we have planned, growth in both core and new. On the core area, all the 5G and the developments that we talked about, and all those things will support the growth, and with the Hypersense and things like that, and the new areas with IoT, ID Central, Analytics, etc. We have also started executing those, securing those customers, or put together, it will contribute to that. So that's the first part of it. And the second part, with respect to what is the current new revenue, this year, the new revenue was just under $2 million from the new areas.
Thank you so much for this and for answering these questions. But the last question is on the margin. So when you say the transitions will happen during this quarter, the existing customers will be moved to your new product. So it would impact the margin?
And Venki already clarified, I do not think that this year we will have, we are expecting the margins to be more or less in the same bracket. But as we start executing by and by, definitely some of the new business have the potential to deliver higher margins. But I think it is too early for us to profile or let's say take a view on it, because the SaaS-based thing, by inherently SaaS-based business are more profitable. So therefore, it should lend itself to more profitability, but it's too early for us to take a view on it. So for FY this year, our profitability will be more or less in the same range.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as a last question. I would now like to hand the conference over to the management for closing comments.
All right. Okay. So thank you all for taking time and for attending this call and your continued interest in Subex. I want to wish you and all your loved ones a safe passage through this very, very difficult period. Thank you very much. Stay safe and take care.
Thank you. Thank you.
Thank you. Ladies and gentlemen, on behalf of Subex Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.